A warm welcome to our guests tuning in the US and Singapore. We're live from our Moomoo offices for yet another live webinar show. I'm your host, Olivia Higgins. Now, while we wait for a few more people to join us, here's a video crafted and curated just for you. Enjoy. Welcome back, everyone, especially to the people who just joined us, tuning in live right now in the US and Singapore. I'd like to remind you that we're here today to equip you with the educational tools to help you and guide you make better investment decisions. So these live streams are purely for educational purposes only and not investment advice. So be ready to learn and be a part of the discussions. It's time to also network with the communities in the chat box. Ask your questions for our guests today. Now, let's hop right in, everyone. We're on to the second half of 2023 already. Let's start off by saying how exciting it is to welcome all of us back to the bull market. We've certainly experienced a roller coaster ride in the first half of the year and also the past few years. But of course, uncertainty continues, yet there are always potential opportunities to look out for. So together, really, today, we're here to guide you through the intricacies of the year 2023, but also to provide valuable insights and answer your burning questions related to the stock market. Today's show is an Ask Me Anything format, topic, stock market thoughts for 2023. Today with me, you've probably seen him on Moonie Navigator on the Moomoo app, or on the previous live shows. With me today from Moomoo Technologies, let's welcome Vice President of Strategy, Justin Zacks. Hi, Justin.
Hi, Olivia. Thank you so much for having me on again.
Thank you as well. Now tell the audience, what's the objective of the show and a little bit about yourself?
Sure. I'm the Vice President of Strategy here at Moomoo Technologies in the New York City area. And I'm really excited in answering everyone's questions. I know there's a lot of questions about the stock market and the economy in general and what's going on, what has gone on this year and what might go on in the future for the rest of the year. So really interested in seeing all the great questions our users have.
Absolutely. And in the past few days, we've been collecting the questions from the community, and also we'll answer more of your questions today towards the end of the live show. So you have to stay till the end. Now let's dive right into it. The format of today's show will explore the important factors that have shaped this year's market landscape with this live AMA session. Now, here's what you can expect. So Justin will analyze and give us an overview and summary of the market trends, some indicators, performance, and then afterward, we will pick as well and answer some of the questions coming in through the chat room. Now, if your question gets answered, our team will reward you with 300 points in app. So you'll certainly not want to miss this giveaway towards the end, okay? So stay till the end because we are all about answering your community questions today. Looking forward to it. Now, Justin, just to kick off, let's start by discussing the significant events that unfolded during the first half of 2023. Now, can you just give us a brief summary regarding the market trends, the economic indicators, and also the industry performance that have shaped the year so far?
Sure. You know, the last time we did this AMA was in January, right near the beginning of the year, and markets were kind of treading along the bottom. There was a lot of fear at that point. And I think what happened is we saw 2022 is really a lot about inflation and the Fed's reaction to inflation. And we have seen inflation subside at a faster pace than a lot of people had expected it to. And I think that has buoyed a lot of people's spirits. Also, the economy continues to do well. A lot of people thought, well, maybe we'll fall into recession. That hasn't happened yet. Earnings have held up so far, particularly, you know, we're just getting into the second earnings season for Q2. Q1 held up pretty well, but the Fed is still hiking and inflation is still high relative to historic norms in their mandate of 2%. So there's still a lot of uncertainty going into the back end of the year.
Mm-hmm. Absolutely. The key word here is uncertainty and also the rising rates environment. And of course, we've got some burning questions from the audience. Now, we've gathered questions from our pre-event post in the community. First question for you, Justin. Now, a lot of users have asked also about the possibility of a recession. Now, user Wonder asks, given housing data is lagging and will not be reflected in the price index until much later, what are the chances that the US economy is already in recession?
That's a great question. And the users really must realize that the economic data is backward looking, and it takes a while to compile all this data and then put it out there and release it, and then we react to it. But you're really looking at data that already happened a month ago a lot of times. And housing's even worse, because think about when you buy a house, you just don't immediately sign the contract and you move in. It takes several months. So your decision making may happen 2 or 3 or 4 months earlier and to what's actually reflected when it closes, and then there's another month for the data to come out. So when we look at housing data in particular, it can be very complicated, but it's really, you know, housing's not really necessarily about the recession right away, but it's really about inflation, and housing prices are linked to about 1/3 of the CPI in what's called owner's equivalent rent. So that doesn't necessarily indicate recession, but if you look at the housing data, even the data, you know, that recently came out in May, it fell by previously existing home sales fell by 3.1%. And that was the 4th month in a row of year-over-year declines, and the largest drop since December of 2011. So it is coming off there. So we are seeing some of that. And we saw on July 27th, we're going to see our first look at Q2 GDP, and that'll give us a better indication on the recession part. And so that's going to be about 1.8%. That's what is expected, and that would be higher than the 1.4%. So there's a real question about some of these lags in the effectiveness of the rate hikes, how long that really takes.
Mm-hmm. Well, you said the context for that. Now, the next question from another Moomoo user, is recession avoidable in that case?
So that's again, a really great question. It's a very tough question to answer. And I think even economists are really uncertain. the recent Bloomberg survey in July, 60% of economists still expect a recession, but that's down. And a lot of that has to do with we've never seen a rate hike cycle similar to this where there hasn't been a recession. But there are what are called long and variable effects. And that can last from anywhere from 9 months to 12 months, sometimes as long as 2 years. And so a lot of economists are always debating about how long this is going to last. But if you look at where we have been, it wasn't too long ago that we were only at 2 or 3%, a year ago in the Fed funds rate. Last year at this time, we were actually below 2%. And right now, the Fed is not even done yet necessarily. We have a Fed meeting coming up. And so all of that really factors in to what's going on. But there's definitely a much more positive view. The Goldman Sachs economist recently trimmed their probability of recession in the next 12 months down to 20%. So that's, some people do have a view that's it's not as likely as it was before. But you really need to understand how these rate hikes work. And they make loans more expensive overall in the US. And that can hurt new business. It can cut jobs. It can reduce demand. The amount of money people want to spend.
Mm-hmm. Thanks for highlighting that. Now, the Fed has hiked over 500 basis points, but the S&P 500 is higher now than it was in November 2022 when it began. So how do you explain that, Justin? User Dogero777 wants to know.
I think a lot of that has to do with people's expectation of a soft landing, and also that earnings have held up so well. They're looking at this really great profit margins that we continue to have with the market overall. And if you look at what happened, kind of the market peaked in January of 2020 at 2, and then it bottomed around September, October of that same year. And at that point, the Fed funds rate was still only about 3%. So we're still working through that. So we're not necessarily out of the woods yet. And if we did enter a bear market at that point, a lot of people are asking, are we now moving into a new bull market? And that's really tough to tell. But people are like, well, we're up so much. But if you look back at some of the most severe bear markets, say 1929 to 1932, where the S&P lost approximately 86% of its value, there were seven different rallies of 18% or more during that period. So it can show you that during a bear market doesn't mean you're going to go straight down. So I think a lot of people are still waiting for some more data, some more earnings to come in to really determine, are we out of the woods yet? And I don't think we can say definitively that we are at this point.
Mm-hmm. Thanks for that, Justin. Now, the next question, given the current market backdrop, and of course, we highlight the uncertainty that ensues, will the Fed cut rates by the end of the year? What do you think in terms of insights related to this?
So this is a great question. It's a question we've actually asked our users very recently. We asked them, and I think at the beginning of the year, there was a much larger expectation that we would see the Fed cut rates. But our users, about 3/4 of them think we're not going to see a rate cut, only 25% expected. And then if you look at what, you can look at this in the market pricing and swaps and things and looking to see what do the actual market participants expect. And they expect one more rate hike by the end of the year, and no cuts until the January-March period. And that rate hike is most likely to come at the next meeting, which is, just coming up next week. So that's kind of what the market looks at. And then you also have to think of, what does the Fed itself, they do count, right? Like, just because the market thinks something or our users think something, the Fed has their own opinion too. And ultimately they're the ones making decisions. So they, updated their so-called dot plot a few months ago, and they're projecting Fed funds to end the year in a range of 5.5% to 5.75%. That's on average. Obviously, there's the market participants or the Fed guys have a lot of different thoughts, so that will vary, but that's an additional 50 basis points from here. So, when you look at all of that, you would have to think there might have to be some type of change for a cut to happen, some type of economic malaise, a large rise in unemployment, or a really large disinflation, particularly among that core CPI and core PCI indicators that we see. So those are the types of things I will be watching, and hopefully our users will be watching to determine whether the Fed will cut rates or not this year. Thank you.
Thanks, Justin. Next question. How does index rebalancing, like the recently announced NASDAQ 100 rebalancing, affect the stock prices?
Great question. So, that is something that doesn't happen very often. And let's talk about something very specific. This is the special rebalancing of the NASDAQ 100 that will be effective Monday before trading. Indexes are supposed to provide diversification. So they don't want too much concentration among the very top stocks. And what we've seen is the largest top stocks have grown and grown relative to the rest of the companies. So the NASDAQ 100 is not supposed to have any companies. The large five companies are not supposed to be above 40% combined, and there's something like right now maybe they're like 45%. I don't know the exact number, but it's very close to that number, so that they're going to have to do a special rebalancing. And so when they do that, the indexers will need, anyone that holding it needs to sell the top stocks, and they'll have to buy the rest of the other stocks. So the key to note here is that anyone that holds it's something that is benchmarked to the index, their holdings overall don't change. So if you hold a $100 equivalent, you'll still have that $100 equivalent of an index. So you're not buying or selling the security. So in theory, it won't move the overall market up or down, but it could move those individual stocks. But it gets very much, there's a lot of game theory involved. And so what you're really talking about here is they've already made the announcement. So, but the actual funds won't make their moves until later, but the arbitrageurs are already starting to make moves, and maybe some of our users are making moves and trying to get ahead of the system. So did they make their moves already? Has it been done? So, we'll find out today. Today's options expiration too. And this is kind of, stay tuned, and after we're done here, we want you to get in that Moomoo app at 9:30. And I think there's going to be a lot of excitement today in markets because of the rebalancing, because of the options expiration. And this is a special event. It hasn't happened since 2011. And prior to that, hadn't happened since 1998. So this is something special, and it can prevent, you can have a lot of opportunities, a lot more volatility for traders. It could be a little riskier too. So be careful trading today.
Mm-hmm. That's a good point there, Justin. In terms of the markets opening and being involved in the potential opportunity of the space once you outline it for yourself, and also the users tuning in and asking your questions. That's a great start in your own learning journey to really put together the tools for yourself. So thank you for that question. Now, next question. Now, short selling seems to be a hot button issue for many Moomoo users. Now, Pokoto asks, there are many cases when good news is announced by a certain company, but the stock price drops tremendously instead. I know this is also quite common. So the next question is, are hedge funds deliberately shorting the stock to create panic selling?
So, I don't know if anyone knows for sure if hedge funds are doing this, but you really have to look at, this is really the idea that just because a company beats its numbers, that it should always go up. Well, a lot of times something like 86% of companies beat their numbers all the time. So if that happened, it would be quite easy to trade, and it doesn't really work that way. I think a lot of these analysts have their numbers, and quote, these are the analyst numbers. There's also what the market expects. And that's where you're truly getting into whether the stock's going to go up or down after they announce earnings. And so the analysts, they put their numbers in, and sometimes they're put in, and they're not always going to alter them every day. So if they made a prediction a month ago and things might have changed in the interim, the stock price might have moved in anticipation. And I always look at it, if you see, if suddenly a stock runs up 20% into earnings in the last 5 days, well, it's going to have a much higher bar. I mean, people are already thinking it's going to do well. So it's not just about meeting that analyst expectation. It has to beat it by a significant amount. And in that respect, short selling is not really involved. Maybe there are short sellers that say they're going to get on it if they miss, but I don't think you see a lot of short sellers saying, oh, I'm just going to short this company because it beat earnings. I mean, that's not necessarily a strategy that they would run with all the time. So it's not necessarily tied to hedge funds and short selling and creating that momentum, but there are hedge funds out there that do specialize in momentum trading, but it's a real chicken and the egg type of thing. Are they following the momentum, or are they trying to create it? And I think more they're trying to follow that momentum as opposed to creating their own momentum.
Mm-hmm. Now, important there, because for the audience members asking more questions related to this, we do want to emphasize the risks of short selling. So remember, with every choice you make, there are also the opportunities, but also the risks that you have to consider, all right? So next question, user Max Moshiri wants to know, what about naked shorting? Is that legal?
Yeah, that's also a very good question. And the point you brought up previously, Olivia, about short selling being risky is also very important. What we want to remind users is when you buy a stock, normally you can't lose more than you invest. But when you sell a stock short, there is the possibility of actually losing more than you even have in your account. And that can make it extremely risky. And so one of the things the regulators here in the U.S. have done is they have banned naked short selling. So when Max asked, is it legal? It's absolutely not illegal. It's illegal. That doesn't mean shorting is illegal. So a trader must borrow or determine a stock can be borrowed before shorting it. If that's not the case, and some traders try to get around it, and there are all these loopholes that include 0+ agreements where they enter long and short trades at the same time, and they try to trade using dark pools off the exchange. And there's different ways they try to get around it. It doesn't make it legal to use these workarounds. It just helps them evade the regulators, but not for long. They will find out, and when they do that, they will be prosecuted possibly. So why they do this is they're trying to artificially drive the prices down by their own means through false rumors or negative publicity. And so ultimately, the market's going to find out what's going on, and the stock's going to go back to its normal level. And that can actually lead to a short squeeze on the other end. So again, that type of thing, you do have to be aware of people trying to do that. And particularly the other way you'll see people do that is sometimes you'll see these naked short sellers try to short something, but meanwhile, they've done some type of a pipe deal where they're going to get the stock in the future at a lower price. And then they're just trying to lock their profits in, but they're not doing it in the right way, where they're doing it in a legal manner, because they need to locate the stock first before they can do that. Thank you.
One user asked, BRICS is set to launch a common currency between countries member backed by gold. So what are the implications then for this and such an initiative for the US dollar?
So I just want to note, very recently, over the last few weeks, the CFO of the New Development Bank, which is a financial institution created by the BRICS countries, those are the developing countries, block of emerging markets, they do not have any immediate plans to create a common currency. So let's just get that on the table. It's been said there are no immediate plans. That doesn't mean that might not happen in the future. But let's remember, we do have another very popular common currency, the euro, that was created in 1999, and it inherited some of those reserves from the German mark. And perhaps it did quite well for a while, and maybe it stole some reserves away from the dollar. But then we had the European debt crisis, 2010s area, and that caused the European reserves to fall to maybe about 20% right now of global reserves. So there's lots of issues around that, and I do think the BRICS countries are interested in having, not having to go through dollars, but you do have countries like China that have, a closed economy, and so that makes it a little bit more difficult to do some of these things. And if it would happen, say it does happen today or tomorrow, and they make that decision, these types of things take decades to work through. I mean, it's not like people shift their reserves immediately. They're going to do it in a very calculated way over a long term. But ultimately, that could mean, for the U.S., could mean less access to capital, higher borrowing costs, and possibly lower stock market values. But it's nothing I think anyone needs to worry about in the immediate future. But it is a good thing to keep an eye on, the overall dollar reserves as a percentage of global reserves. But great question.
Thank you as well to the community for these great questions. Next question, also quite important in terms of retiring. So a user wants to know, what are the possible investment strategies of those who have retired or are about to retire? And are there any particular investment potentials that they could look at and consider?
I think that this is very important to realize that everyone has a particular situation as an investor, and there's not necessarily, I mean, good question, but at the same point, these questions really need to be tailored to each individual. And obviously, as you approach retirement, the way you look at things is going to change. And so you really have to think about evaluating your risk. And in particular, you should think about what your income is going to be. And so if you had a job and you had a particular income, that income may no longer be there, or you're going to only have it for a few more years. So you have to think about, if you're 20 years old, you think, well, I'm going to have income for quite a long time, and I can use that for my spending. But when you're in a retirement, your income is not there. And then you're going to be relying a lot more upon your investable assets and possibly the U.S. Social Security if you have that. So you really have to start thinking about when you're going to need the money too, because a lot of people, when you're young, you just sock the money away. You don't know when you need it. But when you retire, you have a much better idea. I'm going to need X amount each year. And so you got to craft a plan around that. That includes investing for income production, tax efficiency, and also diversification. And that diversification can include equities because they're not perfectly correlated to other instruments. So it doesn't mean you have to sell all your equities once you're close to retirement. They do have a place for a lot of people in a great retirement strategy that includes a variety of different investments.
Mm-hmm. And that's a point about also the objective of every personal investment, right? We all come with our own appetites, our own objectives, and where we are in life. So it's always important to keep educating yourselves. Next question, a couple of users actually asked about this. Now we're talking about artificial intelligence, AI, its effects, of course, with the recent cases, and it is a hot topic at the moment. So in terms of its effects on the US stock market in particular, what are your thoughts and insights regarding this topic and also the recent revelations?
Sure. What I think initially is it's very early in this cycle for investors. I mean, we're just starting now to really hit the broad market and see what AI can do. And I think it can do a lot. And I think we'll see it do a lot in the future. But sometimes a lot of this is so hard to predict. And I really put it into kind of two buckets, things that people are excited about. One is overall how AI can help companies in the markets, like make them more efficient, perhaps produce more content. Those are the types of things that can possibly lift the profit margins of all companies. And then there's specifically some companies that are directly involved in AI. And I think investors are also very interested in learning about those companies. And I think they've gotten very excited. We've seen those types of companies that are directly involved in AI in 2023 have outperformed the overall market by a large margin in a lot of cases. And so when I look at it, I always like to look back at history and think about other types of technology that were very new and kind of that might be still around today, but how did they affect the companies? How did they affect the investment? So look at the automobile from 100 years ago. I mean, it really revolutionized transportation. how people live, how people work, all of that. And 100 years ago, there was hundreds of different startup automobile companies, and a lot of them ended up going bankrupt. And a lot of the great companies were not founded until well after that initial phase. So you have to look at all those things. And some of these investments can still be very risky. And I think at that point in the 1920s, you saw a lot of these automobile companies really do well as stocks, but they didn't necessarily always do well. And some of them ended up doing very well, and some of them didn't. And some of them were merged and went out of business. And the other thing you have to think about with AI is only a few companies are really involved in AI on a large level. Eventually, there's going to be a lot more competition. If it's very profitable, other companies are going to find a way to use it. They're going to find a way to get in there. These certain companies do not have a monopoly on AI at this point. They're going to get in there. And when that happens, competition tends to drive the prices down. And that drives stock valuations down overall. So, there's a real question is, have some of these companies maybe gotten a little ahead of themselves? And I think there are some people that do think that is the case right now. But obviously, we're still waiting. I mean, it could be even more revolutionary than a lot of people think.
Mm-hmm. Thank you for that. And I would love to take some questions right now from our chat room. So keep those questions coming to the audience tuning in right now, especially those who just joined us. Welcome. You're on a show with the US and Singapore. And today we're answering some of your hottest questions for our expert Justin today. Okay, so we'll pick up some of the live questions for Justin, but as highlighted in the beginning of the show, to reward you for being here with us, everyone who leaves questions in the chat room will get about 75 points. But if we pick your question, you'll get 300 points. Okay, so the first question, Justin, are you ready?
Yes, I am.
Perfect. So someone would like to know, Justin, what are your insights on what's going to be hot today and what we should look out for when the market's open?
So, I think, actually, before I get into that, I just want to kind of give you a little bit overview of where we've been this week. We're really going from into earnings season. So a lot of people, Friday, you don't see a lot of earnings. So most of the earnings come out Tuesday, Wednesday, Thursday. We have seen some interesting earnings. So I think people are going to be digesting that today. But what I think is going to be hot today is volatility. I really think yesterday, we saw one of the worst down days for the NASDAQ in probably, I think, about 6 months, maybe. It's been a while since we've seen that 2+% down move. We have that rebalancing coming up for the NASDAQ 100. So what I think is going to be hot is it's going to be those top stocks in the NASDAQ 100 because all eyes are on them. And so a lot of people have done options contracts around those stocks coming into the options expiration. So they're going to be trading the options around those stocks. They're going to be trading the underlying stocks. So those are the stocks I think we should really be focused on because they might be kind of at that pivotal time because a lot of those stocks are going to have their earnings coming out, or they just had them coming out, or they're going to be having them coming out next week. Next week's a big week for earnings. The next 2 weeks are something I have my eyes on for a lot of the big tech companies that are going to be reporting earnings. And I want to know how they did in the second quarter. And I really am actually even more interested in seeing what their projections are for their margins and their growth going into the rest of the year.
Absolutely. Next question. Now, I know in the context of today, post-pandemic world, but of course, some users would still like to know in the pharmaceutical space. So even companies like Moderna and all the other examples related to the COVID era, what are your insights related to this at the moment going forward?
So I think a lot of people have forgotten about the COVID stocks, and people have, a lot of people have generally forgotten about COVID, and particularly in the summer. And there's a lot of research that's been done that says COVID can perhaps be more transmissible or more deadly during the winter months. So this is something you have to think about on a seasonal pattern in when you invest in saying, what is really the long-term prospects if there is another variant, and this is where it becomes very dangerous, and I hope that really never happens, a dangerous, virulent variant. If something like that were to manifest, you could see something happen again similar to what we saw with the pandemic. And if that happens, the demand for remedies, treatments, and vaccines from these COVID companies are going to be sky high. Meanwhile, if that doesn't happen, some of these companies, on the vaccine side, a lot of people are going to take a vaccine every year because COVID has not disappeared. It's still around. Other people are going to say, well, I don't want to take that. And that is going to be a personal preference. And it's all about kind of gaming and understanding those preferences. And that's actually quite difficult. And so the other part is when you look into some of these companies, the technology that they're using can be applicable for other vaccines. It's not just about COVID. And so you have to really do your research. And I think when you invest in biotechnology, it's a lot harder than investing in other stocks because you really have to have an understanding of the basic science. You just can't go in there and saying, COVID, I know about whether COVID's going up or down. It's not that simple. It's really about that underlying technology that they use, their molecule, and how they're going to develop it and what their real chances are. And so anyone that's doing that type of stuff, I would tell them, we have a lot of great information on the Moomoo app that you can really get in there and see the fundamentals of these companies, the news on these companies, what they do, their financials, and, really get invested into that and doing your research and not just jumping right in to say, on a headline about COVID overall, it might move Moderna or another COVID stock right away, but it's not ultimately not going to determine Moderna's path, in the future.
Yeah, so paying attention, like you said, to the seasonal trends, but also going into the fundamentals and exploring the complexities within both on a macro scale, but also in terms of each particular company that you're looking in. So thank you for that, Justin. So next question is related to more on the emerging economy side and also Asian economies. So what are your thoughts on the future of the Indian economy, for example, and how it interplays also with the US market and its global positioning?
Yeah, so I know the Indian company or the Indian economy has a few road bumps, and it's, to me, it's just so tied with the technology in here in the US. So much of the support for what we do here on the technology side is done in India, and now a lot of the new development is coming out of there. And so to me, it's really about India taking that and being able to have the infrastructure, right? So their infrastructure needs to be not just able to support homegrown Indian companies in India, but they really have to think about globalization as an Indian company, not necessarily in support of the US. And I think that's really the next step for the Indian economy, is to truly have their global powerhouse companies that are homegrown and global outreach without being supportive of a US tech company. That they don't have to rely 100% on the fortunes of these US tech companies, because what's going to happen eventually is the Indian economy is going to go the same way as the US tech economy is going to go. And I think they need to see some more of that diversification.
Thank you. Next question. Now, how does monthly OPEX affect your view on today?
So again, we've talked about that a little bit earlier, and I think anytime you have an Opex, it's a big deal. And obviously the biggest options expiries are the quarterly ones, and we just saw one of those in June. July is also very important, but you do have to realize here that the trading levels have been down a little bit because it's the summer, so you might not see as much movement on the options side as we have seen in the past. Because it is summer. But then again, we do have the special rebalancing of the NASDAQ coming up. And so people are going to be positioning. So I really think in those terms, you should be looking at the stocks in the NASDAQ 100 for opportunity today. And I think that's where a lot of that opportunity might come.
Mm-hmm. And next question, what are your thoughts on the Fed rates movements for the second half of 2023?
You know, I'm really excited to see what they do, and I think a lot of people are not really sure. So, you know, right now I think there's like a really almost 100% expectation, maybe 95%, that the Fed is going to hike 25 basis points at its next meeting next week. But after that, I think I've seen just so many different views of what they're going to do. It's like, oh, they're going to pause one more time, then they're going to hike at the following meeting, or they're going to hike right away, or they're not going to hike at all, or people are like, oh, they're ready to cut into the December meeting. And so what everyone needs to realize is it's really data dependent. So what you really need to do after the Fed meeting is, number one, is look at what their statement says, how they're thinking of things, and then it all becomes about the data. And so the other part of it, I think it's really important to parse is how much weight are they putting on employment data and how much weight are they putting on inflation data. And I think in the past year or so, it's just really been weighted towards the inflation data, because that's the data that's really gotten out of control. But that's now coming into line. And what I want to hear from the Fed at this next meeting is, you know, once you get in, you know, obviously no one wants 9% inflation, but if we get down to 4 or 3.5%, and it's not close to their mandate, how does the Fed think about that, and how quickly they can get back down to that 2% level? And I think that's what people are really going to be thinking about there.
Mm-hmm. Thank you everyone for your questions. Keep them coming, okay? For Justin right here, you're here on our Ask Me Anything. So really just throw in all your questions there. If it gets picked, we'll reward you with 300 points, all right? Next question is more on the rebalancing of portfolios, and also going beyond that, going back to the tech stocks component that we discussed earlier. Now, Justin, what are your thoughts on the rebalancing of the weightage of high-flying tech stocks in NASDAQ?
So yeah, this gets again into the special rebalancing of the NASDAQ 100, and it's mainly just those very top tech stocks. So what it's going to do, and what's really happened this year, is tech has outperformed the overall market by a tremendous amount. So it's now going to provide weighting to a lot of these other companies. So I know everyone loves a lot of these tech stocks, and a lot of them have a lot of great opportunities. But I think for investors, this really gives them a chance to look into some of these smaller companies. And I mean, a lot of them are not even, you know, particularly small. If it's stocks in the NASDAQ 100, you're talking about multiple billion-dollar companies here. So, but this gives you a chance to do your research. Maybe you already know a lot about Apple or a lot about Microsoft, but now's your chance to learn about these smaller companies, because a lot of them have been left behind by investors. They don't have the high profile, but they may have a lot of earnings potential. They may have a lot of growth potential. Again, great chance to get into your Moomoo app, do that fundamental research, understand what's going on, in looking at that. And I think we really won't find out about this rebalancing and how it shakes out until next week. I mean, I think today is going to be absolutely key for that, but we really want to look next week. And then if it creates some type of momentum, and maybe that's on the upside, maybe that's on the downside. And we saw maybe it might be on the downside most recently. But I want to see some of these results from these other big companies, the Apples, the Googles, the Nvidias or Alphabets. Want to see what they're doing, what their outlook looks like, and if they can continue that, you know, that trajectory they've been on, which has just been fascinating. And obviously we talked about it before. Everyone wants to know what Microsoft and some of these other companies are going to say about AI and the future of AI and the profitability of AI. That's probably going to be on a lot of investors' minds, and that's going to move these stocks tremendously.
Absolutely. And now talking about profitability, I think it's really like the long-term aspect of it. I think a lot of the users are always thinking, is that just jumping onto another bandwagon. But I think if you look at the fundamentals, like you highlighted just now, and looking into the particular companies via the Moomoo app and studying for yourself, then you can make a better, more informed decision for yourself. Now, the next question is back to the rising rates environment, Justin. Now, value trader here would like to know, are interest rates still having a big impact in the stock market? I think we already covered parts of this, but do you think that in terms of the communities and people thinking that the Fed will cut the rate next year, why do investors still remain positive even in high interest rate environment?
Yeah, and to me, that's a great question. And it is starting to become somewhat of a head scratcher, because at some point you have to think about your risk profile, and an investor has to think about their risk profile. And right now, when you can get guaranteed money from the Treasury at 5% return, and to think to get that in, you know, if you're going to take risk, you want to have a return above that. And you obviously have to think that the stock market, or whatever stock you're going to invest that in, is going to be able to beat that 5% return. And so as the stock market goes up and up, it becomes harder and harder, because the valuation gets stretched to beat those levels. And that's really one of the ways the interest rate comes in. And then it also comes into the idea of, you know, will these high interest rates eventually trigger a recession, both in earnings and in overall demand? And this is going to affect the company's results. And it's also going to bring those valuations higher, you know, that would actually, even though the earnings come down, and, you know, if you think about price to earnings, everyone looks at the price, they don't look at the earnings component a lot. And if that earnings part of the component comes down, you will see the valuations get even pricier, at least on a price to earnings multiple valuation. And so that's something you really have to think about. And that gets back to where I was talking about the long and variable effects of monetary policy. We're not out of the woods yet. There is still a lot of things to go through. And so it's starting to look for some of these cracks in the economy. Will that show up in the labor market? Will it show up in some of these inventory numbers? But I think where you can look immediately is into this earnings season and into margins. And I know Tesla is a company that a lot of people are very interested in now. They just reported earnings, and I think the reaction that we saw there was really driven by their profit margins, what they reported profit margins to be, and what they might expect those profit margins to be in the future. Anyone that's followed Tesla or electric cars knows that Tesla has been cutting prices like crazy. And at some point, you know, that helps increase demand for your product, and that brings up the volumes, but it's not great for your overall profits. And some of the other car makers are now catching up. They've introduced things. We've seen their subsidies from the government for credits, you know, credit down, because these companies are getting back in. So those are the types of things I want to be looking at. Is this just Tesla, or other companies having trouble with pricing power? You know, and if they can't, so when inflation starts coming down, it makes it much harder for these companies to continue to increase prices. And at some point, that demand is going to struggle. And so those are the types of signals I want to see. We saw one of these signals with Tesla. That might be a one-off. It might be industry specific. It might be company specific. But I want to see what are some of these other data points for these other companies down the road next week. And so this is a great opportunity to use the Moomoo earnings tab. So we have a great earnings tab that you can look up directly on the app, find out which are the big companies that are reporting today, next week, or, you know, there's a great calendar that we can look at. You get in there, and then you can go in and analyze each company, find out what time the earnings are coming out, whether it's before or at the market, after the market, see what they did last quarter, see what the expectations and the analyst ratings are for the company. And so it's a great way to game plan going forward. You know, right in our app, you can set alerts up so that you know. Then you can go in there, you can look at the transcripts, you can look at the earnings report, and then make your own evaluation on these specific companies.
Absolutely. And I think that point going into the Moomoo app, that is really about applying what you learned today, especially from the insights that Justin just shared. And also just to add on to the learning component, you can go into your learn tabs, you can go in and learn about how you can even analyze the earnings season, look at reports for yourself. And there are always all these learning tools on the app for you to explore. So definitely check it out for yourself. Okay, so keep those questions coming. We've got just a few more questions left, so we're still picking out the best ones. Keep them coming and we'll reward you with 300 points. Okay, next question is, let's say the stock price rebalances on the 24th. What does this mean for Tesla? Will that be a bad or a good sign? And what should we do as an active investor?
So yeah, so we've been talking a lot about this rebalancing, and again, this is probably the biggest event that we've seen in a while, and particularly because we're kind of in these summer doldrums. We do have earnings that are important, but this rebalancing is technically important for a lot of things. So Tesla was actually, I believe it's the 5th largest company. You don't quote me on this exactly. This is off the cuff. In terms of market cap in the NASDAQ 100 index. And so it's right in that one that they're going to start cutting back. And so it did come off a lot yesterday. So I don't know how that's going to affect it. So, I would have to run the numbers myself and see how that's going to affect the actual rebalancing. But, ultimately, the funds that are benchmarked to the NASDAQ 100 will have to sell these top stocks and buy the lower tier stocks. But again, some of the other investors have front run some of this, and we might have seen some of this selling already take place yesterday. So it becomes a very complicated situation to see what's going to actually happen. And ideally, you really want to look, it's going to be that last hour of trading today is where a lot of that action might come in. So you're not out of the woods yet necessarily for when something happens like that. But Tesla is one of those companies that's right on the edge. I believe it was around 4.5%, maybe 5% of the overall NASDAQ 100. So and now that's been knocked down significantly as of yesterday. So you're going to want to evaluate that and rerun that into your model.
Next question, Justin, with the volatility and the instability of the world economy, and of course, you mentioned the uncertainty. Now, what about looking at gold or metals? It could be ETFs or it could be just beyond and just talking about gold itself or other commodity companies. What are some that we could potentially invest in as a defense play tool? So I suppose we can discuss also hedging possibilities within the uncertain market conditions.
Sure. The great part about a lot of commodities is they're not very well correlated to U.S. stocks. And so they really provide a great diversification tool. With that said, I think you really need to put them in kind of 2 different buckets. You have some metals, say copper, for instance, that are actually really tied to the economy. So that's the type of thing that you're really making a play on your bet on recession or not recession, how the overall global economy is going to do. And so that part of it doesn't necessarily play as well into diversification as a precious metal. In the end run, gold doesn't have that many uses industrially. It has a few, but it's mainly used for things like jewelry. And in particular, it's used as a store of value and has been used as a store of value for probably thousands of years. So in that respect, people look at the scarcity and they look at inflation. And so that's the other part you have to look at with gold. It's like, what is your view on inflation? And it has been in the past a great inflation hedge. But right now we're seeing some disinflation. So that part of it kind of clouds the market and its outlook. And so the other part that I'm always looking at is like, where do some of these new digital assets like Bitcoin fit in? Because Bitcoin, in a lot of ways, is similar to digital gold, and so it has a specific number of coins that will be minted, just like gold. There's only so much gold in the world, and some of it will be mined, and eventually we will run out, and we will have mined all the gold, just like all these Bitcoins will be quote mined, right? It even has that same mining nomenclature. And so that part of it I'm looking at. So does Bitcoin look like gold, or do people that would have invested in gold in the past, now they're investing in cryptocurrencies? And I don't have the right answer to that, but I am very interested in that. And so that's something I've been trying to keep aware of.
Right, and observe as well. And yeah, I mean, great different pillars that we have to consider, and also the volatility space, and looking and observing before we make an educated decision related to this. So thank you for highlighting that as well, and the possible diversification tools. Now, the next question is the outlook on the smaller companies out there. What did you say is the characteristics of the strength points going forward in the next few months? And we can really touch base on the macro aspect of the smaller companies.
Sure. Yeah. To me, and I got into this a little bit before, but we've seen such a narrowing of the investability in just people are just only interested in these few top stocks, and a lot of the smaller companies have gotten left behind. But if you look at something like the Russell 2000 index, it's extremely financial heavy. So financials are obviously going to have a lot of different impact based upon where rates are and where the economy goes. So they tend to do well in a raising rate environment, but in a recessionary environment, not so well. So you do have those two things counterbalancing each other. But it is important to look at some of these smaller companies, particularly financial companies, can have a lot of diversification based upon compared to some of the overall tech companies. But there could be an interesting opportunity for rotation. So maybe it is this NASDAQ special rebalancing that starts people thinking about small caps and saying there's a lot of opportunities. And I think it's also a great opportunity for the retail investor, because retail investors, institutional investors they're too big to invest in some of these smaller companies. So retail investors can find companies that they almost have to themselves in terms of investability. And so when you find one of these companies, I think it can have a lot of room for growth. And that's something you have to think about with these large companies, like what's their total addressable market, and how, if they have 95% market share already, like where is the growth coming from? And at some point, that's the beauty of these small companies. And if they have 0.5% market share, they have a great opportunity to increase that and grow just by market share, not necessarily by profit margins or efficiencies. That just pure revenue growth based upon taking market share can be a great opportunity for these small companies.
Thank you for that. Now, last few questions. Thank you, everyone, for all your great questions. Now, I've picked a few more right here, and of course, rewarding our viewers for being here with us today with points from our team. Now, the next question. Hey, Justin, the NASDAQ announced earlier this month that NASDAQ 100 index will undergo a special rebalancing before the market opens. So really talking about the last trading day before this adjustment is made, according to Moomoo, a strategist at JP Morgan Chase, this special rebalancing is estimated to increase the presence of smaller constituents, with market turnover potentially reaching 60 billion. Now, what are your thoughts on this, and what kind of impact do you think this could potentially have on the market?
Yeah, so I actually, at my previous job, I used to work at Bloomberg, and I talked to Moomoo a few times, and a really great analyst, and is kind of one of the best analysts at these rebalancing. So their data is usually spot on, and certainly someone that I try to follow and see how they're doing things. And it's really about trying to figure out, and I don't know if that user, if Moomoo has provided all of the details on the actual numbers for each company. So you have the overall rebalance in 60 billion, but ultimately you really want to dive deep into, and I think we know which companies everyone's going to sell. That's the top 5 to top 7 companies. But it's really about which of these companies might benefit from the rebalancing to the lower tiers in market shares, and that might be that next tier below. And so it's really about identifying those companies today. And if I was you know, a Moomoo user trader, you know, for today, if I was going to be trading, I would set up a special watch list. So we have the ability in the app to create all these watch lists, and I would pick out some of maybe something in some of these stocks in that bucket from like the 10 to 30 range in the NASDAQ 100. Maybe put them all up there, see how they open, see how they might compare to each other, see, and you want to track the volumes too. So if you're tracking, you know, you want to figure out what the average volumes are for these companies, and then kind of track the volumes during the day to see how they're performing volume wise, and that might give you a good clue on how traders are getting in and out of these companies.
Last question from the community. Now, what happens if the stock prices reaches the RSI on the highest level, and then it's reporting it's earning in profits, right? So how do we evaluate this as an active investor? And do you have any additional thoughts to share?
So yeah, so for that type of thing, you know, that's kind of, I get into kind of my own personal opinion on some of these things. So when you get into technical indicators, and then you add an earnings event, at some point, part of those near-in technical indicators could be thrown out the window, because the earnings are just going to so overwhelm some of these. Now, obviously, that doesn't mean there's going to be some support and resistance at big levels as you go through the day, and they could be much higher. So if you have a big move, a 5 or 10% move in a stock, you could see those types of things. But if something's sitting on support or resistance into earnings, I would say, you know, the earnings are going to matter much more, and the volume that you're going to see on an earnings day is really going to trump, and they're going to be able to blow through some of these support and resistance a lot of times, because people are trading the earnings. The technicals don't come into play immediately. Now, longer term, as you get a couple of days out, then I think the people that trade on the technical side, they're going to be much more interested in, and that gives you a chance to have follow-throughs in a lot of these stocks and reversals. So, and that's one of the interesting parts about the earnings. It's like some people just trade that earnings day and then they forget about it. But I think there's a lot of opportunities for follow-throughs and reversals based upon technical indicators 2 to 5 days after the event. So don't necessarily say, I'm going to be looking at the technicals this day, because the overall flows from news traders and people that are repositioning based specifically only on this earnings and not on technicals, it's really gonna overwhelm the volume on that day. But as you get further in, the technicals are going to be much more important. You want to be looking at you know, where those resistances are, and your RSIs and your other bands that you can set up on the Moomoo app and charting.
Great stuff, Justin, and congratulations to all our users. We picked out your questions, amazing, and you still got questions coming in, but we'll answer the rest next time. So thank you so much, and our team will be in touch in-app for you in terms of rewarding you with the questions that you got for Justin. Now, thank you as well, Justin, for coming onto the show with your valuable insights throughout the show. But let's really shift our focus into going forward. Yeah, so really we anticipate different types of scenarios from a macroeconomic outlook. But just to wrap up, Justin, what are your final takeaways and also the potential opportunities and risks that lie ahead going forward into 2023?
So yeah, so you know, I kind of talked a little bit about what's happened and I'll let you know kind of what's on my radar. And you know, for next week, it's really, we have the earnings that are coming out, but even more importantly, we have the Fed meeting July 25th, July 26th, when they'll have the announcement. And so those are the Fed is what I'm really going to be hyper focused on. And so we really need to figure out longer term with the Fed, is there, you know, what type of lag is there with this Fed policy in its transmission through the economy, and how long is that taking, and where are we at in that cycle? And maybe they might provide us some insights, but people are going to be evaluating that going into the second half of the year, and it's going to slowly play out until it doesn't, until it gets very fast. And so I'll be looking for those momentous shifts in stock market, in the data. Another thing I have my eye on in terms of the economy, in that may or may not have an outsized effect, I'm not sure, and I think a lot of people are evaluating this, is the student loan repayments. So we have this is going to be coming back online in the fall. Students are now finally, or not students, people that had been students that have student loans, and many of them are well into their 50s and 60s, surprisingly, have student loans that they now will have to start repaying again. And so that when you do that, you're really going to be taking some of the money that you might have used for travel or something that's, a new pair of shoes or something that's not necessarily a staple that you absolutely need, more discretionary spending. So how that affects discretionary spending, I'm going to be watching that. And then obviously that becomes political because that's not set in stone yet. The Biden administration is looking for workarounds to a lot of these things. And so some of these people may not have to start paying right away, or they may work out a deal. So I'll be looking at the political landscape going into the student loan repayment and seeing, how that affects the overall market, and as well as not just the overall market, the psychology around it, because a lot of times it's not just about I have to pay an extra $100. It's about how that psychologically affects your mindset, how you're going to then go in and say, that's not just about the $100. It's about that other spending money that now I'm a little bit more nervous because I have another payment. Once you have that other payment, you become a little bit worried about what's going to be going on. So, I'll be looking for all that, and it's all about when these turns come. If we do see a turn, and maybe we don't, maybe we do, but if we do see a downturn, it could be very fast and vicious, and we've seen that happen in the September and October time period, time and time again, historically. Obviously, it doesn't mean it will happen again, but those are the time frames that when you hear about some of these crashes and when things have occurred, that's when they've occurred historically. So you really have to be aware of your risk going into the fall, what's going on, and really game plan around what a lot of this data that's going to be coming out and what the Fed's going to be doing. But thank you very much, Olivia, for having me. I really appreciate being able to answer all of these great questions, just great questions from our users. We have such a savvy, involved community. And if you are not in the community that often, please feel free to explore around a lot more. Our users are a great and vast resource for a lot of this information, not just me. Please listen to a lot of these users have a lot of great things to say and a lot of great opinions on particular stocks and in stocks in the markets in general and the economy.
Mm-hmm. Once again, that was Vice President of Strategy at Moomoo Technologies, Justin Zacks. Everyone, see you for our next show, Justin. And of course, if you want to watch the replay of this when it's made available by our teams, you can do so and connect with Justin as well. Thank you, Justin.
Thank you.
To our users, we hope that today's market review and outlook has provided you with a deeper understanding of the financial landscape. Now, remember that knowledge is power, and staying informed is crucial for making better financial decisions going forward. Now, as usual, these live shows are a way to connect you and be the bridge to experts like Justin today. So we really hope that you learned as much as you could as we continue to guide you forward into the second half of 2023. Now, also keep learning for yourselves, keep asking those questions, and even if this show ends, keep those questions coming in anyway, because we're always keeping track of what you want to know in the community and also craft content related to that so that you can keep learning together with us. Now, to continue receiving valuable market updates like today, the replay of this show, once it's made available by our teams, will be seen in-app. So really, if you want to keep track of its latest revelations and upcoming shows that we're going to have together, do scan the QR code right here to follow Justin's Moomoo account and also myself, because we're going to have regular shows upcoming for you, and we're excited to share more about that soon. Now, together we can navigate this ever-changing world of finance with confidence together. So we really cannot wait to see you for the next show to continue elevating your educational journey. So really, thank you so much, everyone. It was a pleasure having you here with us. We'll see you for the next show. Wishing you a profitable day. Once again, you're with me, Olivia Higgins.